Every single day this week, this was going to be the moment I was waiting for, the moment the markets are waiting for. Remember, since that bond yield debacle last week, the stock market has been worried about this. Now, coming into the day, there was a litany of things that investors wanted to hear from Jerome Powell. Maybe an extension of the exclusion of the SLR, maybe an announcement of Operation Twist. How about possibly yield caps, or just working to find a way to convince investors that $1.9 trillion would not necessarily move the inflation needle? On the other hand, some economists and market watchers were even worried that anything the Fed chairman said that strayed away from the hymn sheet that he's been singing from would spook investors. Well, he didn't stray away from it at all. Either way, it's clear that this grand experiment at the Federal Reserve is running into problems. Some foretold, some we're not really sure we knew what they were going to be. So for more on what Powell's problems will be going forward, let's bring in Quill Intelligence CEO Danielle DiMartino Booth, along with Walser Wealth Management President Rebecca Walser. Danielle, so are you happy with what he had to? I just thought he was so. Check this out. When they asked about the yields, spike in yields, he said, yeah, it was notable. Notable? I mean, that's an understatement. I just think the dude is too cool.
He had serious foot and mouth syndrome today, Charles. He used the word disorderly. I think he's going to regret using the word disorderly because that's exactly what he's got. He said he wanted to avoid tightening financial conditions. Well, they're a heck of a lot tighter since he opened his mouth. And there was indeed an opportunity. Right now, the spread between long maturity treasury rates and short maturity treasury rates, it's similar to where it was the last time the Federal Reserve launched an Operation Twist. Call it Operation Twist 1.0. This would solve both of his problems with one fell swoop. He could get short rates up, which he needs to do, and pull the long rates down. This was his great opportunity to bring this subject up, and he did not.
Rebecca?
I agree 100%, although I do have to say I'm super excited about your Casey at the bat. You hearken me back to middle school with that. So I was like, yes, Charles, thank you for that right moment in my day. I totally agree with Danielle. In his speech, he said, the last week had his attention. That's what he basically said. It had his attention. I guess I'd have to say that I'm glad that he did say he won't let market conditions tighten too broadly. But really, if you think about it, Charles, we're about to go into a blackout period on Saturday where they won't talk again until the FOMC, March 16th and 17th at the next meeting. So if we don't hear something else officially before then, we're not going to hear anything until, and I am 100% in agreement with you. We expected to get something, maybe not necessarily in this forum because it was a Wall Street Journal event, but something.
Yeah, he could have done something. Obviously, Operation Twist to announce it now, but to allude to it, that's all. Wall Street can connect the dots. Instead, it's pretty clear the Fed's created a Frankenstein's monster, and this has happened over the years, right? For the most part, they've always bowed to the taper tantrums of investors. So you got to wonder at some point, Chairman Powell's going to have to pacify them as the market keeps going down and yields keep going up. Rebecca, what's the new magical number where this does more than just look notable to Chairman Powell on the 10-year? Would it be 1.7, 1.75, 2%? I mean, where does the Fed think now maybe they have to take emergency action?
That's a great question. The question is, Charles, the problem is it's the unsolvable equation. It's exactly what Danielle said. We have a situation where we're at the same time trying to stimulate our way out of what would be a Great Depression. I've got to say it because we're so shut down. And yet we're reopening. So he knows that the economy is going to start coming back with jobs, with labor increases. And he's still at the same time trying to maintain stimulation and at the same time not have inflation. This is a mathematical impossibility that has to get resolved somehow because it's really going to continue to freak out the market.
So Danielle, how does the Fed model out risk and assign importance, right? What matters most to them? They've got their official mandates, and then they've got so many other things that they're trying to achieve. Chairman Powell said it was not appropriate to isolate on one particular interest rate or price. Well, what's going to get their attention most?
I think what's going to get their attention is if you look and see what's been moving along with the rise in interest rates we've seen is we really have started to see corporate bonds fall out of bed. And I can promise you that given how much credit creation the Fed has facilitated with its low interest rate policy, it is paying attention to what is happening in the credit markets because they feed directly back through into the stock market. It's a terrible cycle that can get going. But I promise you this much. He may have fumbled today, but the Fed will change its policy if the wheels truly come off. I promise you that. The Fed will pivot. He's pivoted before and he will pivot again, but he really is making an error right now in judgment.
Right. And to that point, Rebecca, some are saying, why even panic right now? Guggenheim, in fact, put out a chart showing that the 10-year is still in this long range, right? It's been range bound that suggests it could actually trough next year at 0.5%, so that it would pull all the way back if we could just be cool through this rough air pocket or so. What are your thoughts on that?
I don't know the modeling that they would come up with that we would actually decline with all the stimulus that's still projected, another 1.9 coming, that we haven't even spent all of it yet. So how in the world they have a projection of that it would be at the lower bound of the range at 0.5% is beyond me. It's not in any economic calculation I agree with, and I disagree. I think we are going to see inflationary pressure as we reopen and we continue to stimulate, and unless we have a sea change of what they're doing, as Danielle said that he would actually do, then I don't see us anywhere near 0.5%. No way.
Yeah, he's going to definitely go back and look at this, and I agree 100% with both of you ladies that the Fed's probably going to do something sooner rather than later, particularly after this performance. They've created a beast, and they've got to control it. Danielle, Rebecca, thank you both very much. Appreciate starting the show with you. I want to bring in now